Your last trade was truly perfect. Everything was exactly as it should be. Your entry was right. Your risk reward ratio was 1 to 2. You stayed loyal to all your rules. Then suddenly, the market reversed and you got stopped out. Here's the most important question. How did you react? Were you able to accept this as something ordinary, calmly, or did you feel those dark emotions that you know deep down you shouldn't feel? Did you want to prove the market wrong? That you weren't mistaken? Did you want to scream that you're much smarter than this and that you didn't make a mistake? Do you know whose voice that is? Your ego's. It's your ego speaking, and it's silently destroying everything you've worked so hard to build. Every edge you've gained, taking it from your hands, is doing this simply because it's hurt. It doesn't care about your well being or your trading career. Here's a truth most traders constantly deny. The reason you can't consistently generate profit has nothing to do with your strategy. It's not your indicator's fault. It's not your broker's bad spreads. It's not a manipulated market hostile to you, algorithms, or whales trying to take all your money either. It's you. More precisely, your ego. Your ego wants you to believe you're special in these markets. It whispers to you that in an environment where everyone making consistent income from these markets follows rules, you can be exempt from this. It tells you this time will be different. And every time you listen to it, every time you feed it, you're actually losing money to traders who've learned not to listen to their egos. Today, we're going to intimately meet the most dangerous enemy every trader faces. Not the markets, not volatility, not even fear or greed. Your ego, the invisible force that transforms winning strategies into losing machines. The silent enemy that makes even the smartest people do foolish things and lose money with real capital. By the end of this video, you'll fully understand how your ego constantly sabotages your trading career. More importantly, you'll learn the exact steps you need to take to eliminate it before it destroys you and your account. Let's start with a story about Marcus. Marcus was intelligent. He had a PhD in applied mathematics from MIT. He could build algorithmic trading models that would make professional quants jealous. His backtests showed that even in the worst year, he'd achieve 40% returns. The strategy was mathematically sound, thoroughly researched, and sufficiently tested. Then he started trading with real money. Within 6 months, Marcus managed to blow up 3 separate accounts, totaling $80,000. Not because his strategy was flawed, because he couldn't execute it properly. Every loss triggered something inside him. His intelligence, the identity he defined as being a smart person, couldn't accept failing or being wrong in the face of the market. So, he would analyze each loss for hours, doing this, believing that more thinking would solve his problems. But there was a problem. The more he analyzed, the more emotional he became. And the more emotional he became, the worse his decisions got. This is the intelligence trap itself, and it stems from pure ego. Marcus believed he could escape emotional reactions through thinking. He approached trading as if it were a chess match, assuming perfect rationality would lead to perfect outcomes. But markets aren't chess games. They're psychological battlefields where emotional state determines survival more than intelligence. His ego whispered to him that he was smarter than the market, that his analysis was superior, that if he just thought harder, worked longer, analyzed more deeply, he'd crack the code. But here's what Marcus never understood. The market doesn't care about your degree. It doesn't care about your analysis. It doesn't look at how many hours you spent researching. The market cares about only one thing. Can you stay loyal to your plan while your ego is screaming at you to do the opposite of your rules? Most traders can't do this because ego is a master at disguise. It comes with a different excuse every day and constantly tests you. It doesn't announce itself. It doesn't say, hey, I'm your ego, and I'm about to make you do something foolish. Instead, it does this. It whispers thoughts that seem reasonable but are actually emotional reactions dressed up as rationality. Let me show you how ego destroys your edge in 3 brutal ways. First, the need to be right. Your ego hates being wrong. It can't deal with it. It's coded into your identity as a competent person. When you take a trade, your ego ties your self-worth to that trade's outcome. If you manage to profit from the trade, congratulations, you're a genius. But if you lose, you're a complete disappointment. Your ego makes you feel like your entire life has been wasted. This is psychological poison. Think of a professional poker player. They understand that losing individual hands isn't a personal problem. What matters is managing to make correct decisions based on probabilities over thousands of hands. They can lose with pocket aces and don't question their intelligence or abilities. They know this is part of the probabilities, but traders, Most can't separate their identity from their trades, and they take personally every feedback the market gives them, getting emotionally affected easily. And we all know what happens next. You're risking $100 to make 300. As soon as you enter the trade, it starts moving against you. Where you should place your stop, your potential loss is $98. Price reaches $98.50, but you haven't placed your stop. Your ego kicks in. It'll reverse. Don't worry, I know this market. I've studied the charts for hours. I won't be wrong. So, you keep stretching your stop point. You tell yourself you're being flexible, that this isn't a problem. But deep down, you feel you're on the wrong path. Disaster is approaching. You know this quite well because you're not experiencing this for the first time. Because you want to protect your ego from the pain of being wrong, you lose $300 where you should have lost 100, all because you couldn't accept being wrong. Millions of traders experience this cycle every day. The need to be right has taken money from all of our pockets, and it continues to take from most traders. This destroys far more accounts than any sudden market crash. Second, the illusion of control. Your ego loves control. It can't live without it. It believes it needs to control everything and that it can. In a world built on uncertainty, it desperately seeks certainty. This is why traders analyze obsessively. They add more indicators, study more patterns, and constantly consume new information. They try to control a market that's impossible to control. But here's a truth that will either liberate you or destroy you. In the markets, you can't control anything except your own actions. It's not possible. You can't control price. You can't control volatility. You can't control a potential war that might break out that day. You can't control whether your trade will bring loss or profit. The only things you can control are your entry point, your exit point, your position size, and your emotional reaction. That's it. Nothing more. Everything else is an illusion. Your ego can't accept this. It can't warm up to this truth. It's bothered by it. So it creates narratives that give you a sense of control and makes you believe in them. I know this stock will go up. No, you don't. You have an opinion based on pattern recognition, but you don't know. Please don't say I know. Don't impose this on yourself this way. Remind yourself that every possibility always exists. The support level will definitely work. Maybe it will, yes. Maybe it won't. You're not determining which one will happen. I can predict where price will go next. No, you can't. Nobody can. Not consistently, not reliably. Sometimes you'll be able to, sometimes you won't. Every time your ego convinces you that you know what the next move will be, when the market does something different, you're preparing yourself for emotional devastation. Don't forget this. Professional traders think with probabilities, not predictions. They don't say, this trade will win. They say, this trade has a favorable probability, according to my rules. It's worth evaluating, and I'll take this bet knowing I can still lose. This subtle change in language reveals a major shift in psychology. The professional has killed the need for certainty. They know they don't need it to make money. They've internalized this. The amateur is enslaved to the need for certainty. Third, the comparison trap. Your ego is constantly comparing. Am I better than them? Am I winning? Can I keep up? This is why social media manages to destroy and push most traders out of the game. You see someone sharing a screenshot of a day where they made $10,000 profit. Your ego immediately compares you to them. They made $10,000 today, and I lost 200. I must be doing something wrong. Their strategy is better, or maybe they're smarter than me. I probably need to trade more aggressively. Actually, you're only seeing the result. You don't see the 50 losing days before that profit. You don't know the process. You're unaware of the over-leveraged positions that could easily blow up their accounts. You don't know the years of painful process that came before that single winning trade. You only see the success part. And your ego sees this as proof that you're inadequate and forces you to do things you know you shouldn't do. How painful. This comparison triggers a cascade of terrible decisions. You push your position size beyond your risk tolerance. You take trades that don't meet your criteria. To catch up with someone else's results, you abandon the strategy you've dedicated years to. Your ego doesn't want you to build wealth slowly and consistently. It wants it now. It wants impressive results. It wants to see profits you can share screenshots of. It seeks external validation that you're smart, talented, and successful. That's why you take unnecessary risks. You overtrade. You chase missed moves. And as always, the market doesn't hesitate to punish you for all this. Professional traders don't compare themselves to others. They score themselves on how correctly they can execute their own plan. Did I follow my rules today? Did I act with discipline? Did I manage my risk correctly? The answers to these questions directly determine your success, not how much money someone else made on a trade they possibly took in a demo account. So, how do you kill your ego before it kills your account? We've come to the point where everything changes. If you can manage to internalize this perspective, your entire trading process will transform. I'm talking about the radical acceptance of uncertainty. You must accept at bone deep level that you cannot predict or control market outcomes. You must internalize this. You shouldn't say this just to say it. You must truly know this is how it is. You don't need more analysis, indicators, or insider information. Markets move according to collective emotion, institutional flow, algorithmic trading, and countless variables that no individual can fully comprehend or predict. When you truly accept this, something magical happens. Your need to be right about every trade disappears, and when the market moves against you, you stop perceiving it as a personal attack. You stop measuring your own worth by your win rate. You become emotionally neutral, independent, unaffected, and this is your superpower, your greatest strength against the markets. Please write this somewhere and internalize it. I don't know what the market's next move will be, and I don't need to know. I just need to consistently execute my edge. That's all. Read this every day before trading. Make it part of your operating system. Internalize it, and watch your trading journey rapidly transform. We're going to talk about another very key topic. If you can do this too, you'll really solve many of your recurring mistakes. One of the key things for your trading journey: identity separation. Your trading results are not a reflection of your intelligence, your worth, or your capability as a human being. A losing trade doesn't make anyone foolish. A winning trade doesn't make anyone a genius. In a probability game that requires thousands of iterations to produce meaningful results, these are just outcomes. Professional traders develop what psychologists call identity discipline. They completely separate their self-worth from their trading results. You're not a bad trader because you closed the day with losses. If you'd won, you wouldn't have become a genius. You're simply executing a strategy that will produce a positive result over time, and individual results are meaningless noise by themselves. Making this separation is difficult because society conditions us to evaluate ourselves based on outcomes. We're taught that winners have value, losers are worthless. We're programmed to tie our identity to our achievements. But for trading, this programming is unfortunately fatal. It's one of the things that causes the greatest losses. You must create a new identity. Not, I'm a profitable trader. This is outcome focused. Instead, I am a disciplined executor of my trading plan. This identity must be sustainable, independent of wins or losses. It must be based on process, not results. And this perspective makes the trader bulletproof. We've come to the journaling issue that's talked about everywhere: the power of journaling. Your ego operates in the shadows. It whispers. It manipulates. It tries to convince you that your emotional reactions are logical decisions. Journaling, however, makes it visible, more obvious. After every trade, I want you to write the setup that triggered the trade, your emotional state before entry, whether you followed your rules, your emotional state during the trade, why you exited when you did, what your ego is telling you. Over time, you'll reveal your own cycles, your patterns. You'll see that every time you overtrade, it stems from a need to prove something. Every time you don't follow your plan, it stems from fear of missing out. Every time you move your stop loss, you'll see it comes from your ego's refusal to be wrong. When you see these patterns, you can intercept them. The moment you feel the urge to deviate from your plan, you'll be able to recognize this as ego, not logic, and you'll make a different choice, consciously too. I want to warn you about strategic ignorance. This is very important too. Your ego loves information. More analysis, more indicators, more news, more opinions. It believes more information means more control. But professional traders practice strategic ignorance. They deliberately limit information during trading hours. They don't want to be influenced even slightly by anyone. They completely eliminate this possibility. Why? Because information creates emotional noise. Every news headline, every market opinion, every social media post about someone else's trade creates a psychological interference pattern that makes disciplined execution harder, whether you want it or not. Spend your time before trading hours analyzing, planning, and preparing, not being exposed to others' opinions. When you're trading, follow your plan and ignore everything else. Don't read news. Don't check Twitter. Don't follow financial television. Just execute your predetermined plan based on price action. Stay loyal to your rules. Make profit, take loss, or if it's a day you shouldn't trade, just sit and repeat this. That's all. This stops you from feeding your ego. Without constant external inputs you can react to, your ego has nothing to hold on to. You just execute your plan, accept your results, and move forward. Finally, I want to talk about a perspective that will keep you standing. Embrace losses as tuition. The losses you experience will teach you much more than any training in the market than many fake gurus on Twitter. Your ego sees losses as judgment, proof that you're not good enough, evidence that you failed. We need to completely reprogram this. Losses are tuition. They don't tell us anything about our identity. In the probability game called trading, it's the cost of doing business. Every professional trader has lost millions collectively over their career. The difference is they see these losses not as the end of the world, but as the price of education and getting better. When you lose, ask yourself, what did this trade teach me? Sometimes the lesson is nothing. This was a valid setup that didn't work. This is normal variance. I executed correctly and got stopped out. This is a good loss. Sometimes the lesson is I violated my risk management because I gave the trade more meaning than necessary and overconfidence. This is an expensive but valuable lesson. But if every loss triggers self-doubt, revenge trading, or analysis paralysis, it means your ego is still in control. And eventually, if you don't destroy it, it will destroy you. We've come to the ultimate test. How do you know if your ego is dead or just wounded? Take a trade, follow your plan perfectly, and get stopped out. How do you feel? If you feel angry, ashamed, or desperate to immediately win it back, your ego is alive and dangerous. But if you feel calm, neutral, and ready to wait for the next valid setup, you're on the right path. If you actually feel satisfied because you executed with perfect discipline, even though the trade lost, you've reached the level where consistent profitability is possible. Congratulations. That's the goal. Not to never lose. To lose without taking emotional damage. To be able to execute your plan regardless of recent results. To succeed in separating your identity from every individual outcome. Let's end with James's story. James was a successful trader. For 10 years, he made millions for his firm. When asked his secret, he said something that would forever change how I think about trading. I spent the first 5 years of my career trying to be smarter than the market. I lost consistently. I spent the next year learning to be dumber than the market. I just followed my simple rules without thinking I knew better. That's when everything changed. James killed his ego, and the day he did that, he became unstoppable. Your ego is not your friend. It doesn't protect you. It doesn't make you better. It makes you emotional, reactive, and unprofitable. The market doesn't care about your intelligence. It doesn't care about your analysis. It doesn't care about your need to be right. It only cares about one thing. Can you execute your plan with discipline while your ego is screaming at you to do something opposite to your rules? Kill your ego before it kills your account.